Welcome, everyone. My name is Don Lowell, and I'm the Director of the Small Business Development Center at PCC. Today's webinar will be an update to the current SBA loan programs, the EWEL loan, as well as the Paycheck Protection loan. Before I get started, I'd like to thank the City of Pasadena, as well as the Chamber of Commerce and the Business Improvement Districts of South Lake, Playhouse Village, and Old Town Pasadena as well. Thank you for coordinating this, and thank you for your partnership with the SBDC. So today's format will include a few slides, as well as question and answer. And folks, all of your questions should go into the chat function in Zoom. And my colleague, Larry Johnson, will be answering as many of them as he can while we're doing the presentation. And then at the end, we will review some of those, read some of them out loud, some of the more popular questions, and continue to take questions as well. The goal here was to get as much Q&A in as possible, but I am going to run through a few slides first, just to bring everyone up to speed on the programs and a few of the updates. So with that said, let me start real quick with a few words about the SBDC. We are a resource partner of the SBA. We are 1,100 strong across the country. And what we do is provide technical assistance for small business owners. We provide one-on-one business consulting and workshop training at no cost or at low cost to business owners. My center is hosted at Pasadena City College, and I'd like to take a minute and give a shout out to the host, PCC. For those of you who may not know, PCC is one of the top 10 colleges in the country. It's number one in California for several metrics, but it's consistently in the top 10 of community colleges across the country as well. And I would encourage you as business owners to check out their new Freeman Center for Career and Completion on campus. There are thousands of amazing PCC students will become amazing employees as well as interns. And if you have needs for that, you definitely want to check out the Freeman Center website at PCC. So we're going to talk about the EWEL loan, the Economic Injury Disaster Loan, the advance that comes with that loan, and the Paycheck Protection Program. So the EWEL and the PPP or the PPP. As a quick review or summary, the EWEL is a disaster loan. These are loans that are made directly from the SBA, actually funding from the US Treasury. And those are really only available during times of disaster. Any of the folks on this call who were impacted by any of the fires or floods in California may be aware of disaster loan funding that was provided at that time. The Paycheck Protection Program is a more traditional SBA loan. It's going to go through SBA lending partners. In red, you'll see some new information in terms of funding that is soon to be available. As you all know, These programs are currently on hold while Congress appropriates more money. That appropriation went through the Senate Tuesday and is with the House today. And I expect it to be completed and signed by the president by tomorrow. And I would expect that these programs would be up and running again as early as tomorrow afternoon, or more likely on Monday. As you'll see here, there's $50 billion in new funding for EIDL, an additional $10 billion for the advance, and $320 billion in new funding for Paycheck Protection. If you're currently in the queue for any of these, then your status should be okay. I'll talk a little later about how you can follow up on the EIDL loan, but I can share with you that we do have clients who are funding right now in some of these loans. So they were approved prior to the stoppage, and they are now being funded during this period of stoppage. So if you're in the queue, be patient. I know that's hard, but you should not need to reapply for any of these loans. You can, however, follow up, and I'll share that with you in a second. So real quick, the EIDL loan is for operating costs. It can be up to a $2 million loan at 3.75% for 30 years. And there's an 11-month deferment. You don't make any payments for 11 months. Note that the interest will accrue, but you won't make a payment for 11 months. Eligibility is pretty standard by SBA standards, under 500 employees. Nonprofits are eligible for this loan. Currently, 501c6s, chambers of commerce, are not eligible, but I read this week that that may be changing. So those of you who run chambers may be getting some good news here shortly. There are some Congress folks that are pushing in that direction. Illegal and gambling concerns are not eligible. So what will you need? First of all, you will need to be credit worthy, and they will pull your credit report. So be prepared for that. You'll need to provide information for any owner with more than 20% ownership. And you also should be ready to provide your previous 12 months of revenue, cost of goods, operating expenses, and the number of employees that you had on January 31st, noting that you do not count your 1099 employees, your independent contractors. There's no personal guarantee required up to $200,000 on this loan. Collateral is not required. However, they will attach it on any loan above $25,000. So if you do have collateral, they will ask you to pledge it, but it won't keep you from getting the loan. By now, many of you have applied for this loan. I've included in this slide the information you need to follow up. You may email them, or you can call them. You'll be on hold for a little while, but you should eventually get a person that can give you an update. That's a good slide to screenshot. And by the way, I will be providing these to the city, and a recording of this presentation will be provided as well. So those of you who are calling in you'll have a resource there. The advance. So part of the EIDL loan is an advance that can be up to $10,000. We found out last week that the way they are determining this amount is based on the number of employees that you report. So the formula is $1,000 per employee, up to $10,000. The advance will should come to you rather quickly. You'll notice here when you applied for the EIDL loan, you'll be asked to provide your banking information. This money will be deposited typically without a phone call or an email, so you'll want to keep an eye out for it. The goal was to get you some money as quickly as possible. Now, the advance may be forgivable. For example, if you are declined for the EIDL loan, ultimately, the advance is forgiven automatically. It may also be forgiven if you spend it on allowable expenses like payroll, similar to the Paycheck Protection program, which we're going to talk about in a second. Paycheck Protection is for payroll. It's to help keep your employees employed. It's based on the payroll that you report, and that can also include benefits and retirement, as well as payroll taxes. This loan can be up to $10 million. It's got a 1% APR. It, however, is only a 2-year loan with 6 months of deferment. So this is a much shorter loan for a much more specific application to pay employees for an 8-week period. This loan is now available to self-employed, independent contractors. That was as of last Friday. In this loan, you'll need an SBA lending partner. So this loan is through, ideally, your business bank is where we'd recommend you start. Again, today, most are going to tell you they're not accepting applications. When it opens back up, you'll highly encourage you to start with your business bank. You'll need an SBA Form 2484 to apply, your W-2s and 941s, and for you solopreneurs and IDCs, they're going to reference your 1040 Schedule C. If you have employees, they'll also want your 941. But you are eligible, and I highly suggest you apply. There are no guarantees or collateral required for this loan. It's a short-term loan. Here's another slide to screenshot. This first link is to SBA Approved Lenders. And this one below it is a great article with dozens of lenders. Note that many of them are not based in California, so it's a national list. It's a really good place to start if you're looking for something outside of the typical banks, B of A, Chase, etc. Again, I would encourage you to start with your business bank first and then go to an alternative. So let's talk a little bit about how much you can borrow and what's included. Let's start on the right. salaries, commissions, tips, all of the medical benefits, including insurance premiums, that all counts as payroll. The calculation will be 2.5 times the monthly average of those costs. So in 2019, they'll divide those costs by 12, multiply it by 2.5, and come up with a loan amount. So proprietors, they're going to take that information from your Schedule C. And you'll see here there are different calculations based on if you have employees or don't. If you do not, they're going to look at line 31 from your Schedule C. Forgiveness. The Paycheck Protection loan may be forgivable. I say maybe because it's based on allowable expenses. And the way it works is that from the date of loan origination, you have 8 weeks to spend that money on payroll, rent, and utilities. Keeping in mind that 75% of that expense must be spent on payroll. The last bullet here is the most important. Your lender will give you the details you need for all of that. How will you document it? When will you apply for forgiveness? You definitely want to speak with your lender. You want to understand the documents when you sign. They're ultimately the folks that will define that for you. But as a rule of thumb, spend over 75% or at least on payroll to be eligible for forgiveness. Your forgiveness can be reduced if you reduce the number of employees that you had. You have until June 30th to reinstate the same number of employees. The details of that are coming out here soon. But again, as a rule of thumb, the FTEs need to be the same by June 30th as they were on average from last year. I'm sure there'll be some questions on that as well. Lastly, this is more of a state program, but it's brand new. I wanted to put a slide up on the PUA. This is unemployment assistance for folks who aren't typically eligible for unemployment benefits. Here's the website you'll want to go to. This begins on the 28th. The key takeaway here, folks, is you may also apply for a Paycheck Protection loan. Having unemployment assistance does not preclude you from getting a Paycheck Protection loan and vice versa. They have a great website for this with really, really good FAQs and specific information. I would encourage you to check it out, especially the sole proprietors, self-employed. And then lastly, please let us know how we can help. The SBDC is here to help you walk through those applications. We're here to help you begin to plan for life after COVID. You'll see us begin to do some webinars on e-commerce for folks who want to start to look at your current marketing strategies. We have advisors who can help you. Please reach out. With that, let's go to the question and answer.
So Don, there was one question that came up that I think we want to emphasize. I understand the frustration that many of you might feel in having tried to get through to banks and not getting responsiveness from the larger banks, and have been tempted, if not actually applied to multiple banks for the PPP. That is going to be problematic because the banks will not process an application if there is a conflicting alternative application being considered by another organization. So that will cause both applications to processes to be halted until some sort of resolution can be obtained. And so I would strongly suggest that if you do wish to apply to another bank, you contact the bank that you've applied to initially and have them delete that application, withdraw that application, so that you can go to a new institution. Multiple applications are problematic to the system.
Good to know, thanks.
So in the chat box, I listed a comprehensive link for lenders across the country, even online lenders, along with their criteria, what they're looking for. So you will find small lenders as well as large lenders, but also it'll let you know if they're accepting applications currently and whether or not you have to be an existing lender. There are some of them that only want you to open an account. You don't have to be an existing borrower. So this should be a very helpful tool for you.
Looks like we have several questions about sole proprietors, Larry. So, and I know you answered a few, but let's see if I can summarize it and then you can clean it up. As a sole proprietor, with or without employees, you are eligible. You'll want to complete a 1040 Schedule C for 2019. Even if you haven't filed yet, that's okay. But you'll want to complete one. And if you're a solopreneur without any employees, they're going to look at the net income on line 31. And that's going to include the data they need to calculate a loan amount.
Hey,
and that's whether you pay yourself through payroll or not, you are eligible. And again, we can help you walk through that if you have questions.
Can you talk about, for solopreneurs who might have only had income for Q4, or for folks that acquired a business and they don't necessarily have the paperwork, is there any other form other than 1040 Schedule C, line 31, that they can use?
So, yeah, I think tax forms are ideal. That's what they're going to be looking for. So if there were quarterly filings, 940s, 941s are sufficient as well. but I'm not saying you can't apply with your own, say, P&L or balance sheet, audited financials, but that's going to be up to the lender working with you to determine a loan amount.
I think you're going to find a lot of resistance with lenders. They are looking for verified income to the degree that it is on as part of a government documented resource. For the most part, if you've created your own Schedule C or you've got some other way to document that you receive some type of income, that's going to be key. And some of the lenders are more of a stickler than others, so you may want to have a conversation with the lender, given that you have proof that is different than what's standardly required. That's going to be problematic if you're doing an online application, which is going to be focused on the standard sources. So it may take a bit of effort.
We had another question. Does the cap for $100,000 per year per employee only apply for the 2.5 months? If you do use the money to compensate an employee, is it forgivable if the employee makes more than $100,000 for the year total?
Great.
You can't. It's not designed to pay employees at a rate of more than $100,000 a year. So $100,000 is the cap. So it's designed so that what they really want to do is not have a situation where highly paid employees are receiving the benefit.
Right.
Now, in California, we might argue that $100,000 is not highly paid.
And let me add, keep in mind that cap is part of your calculation for the loan amount. So you're looking at a monthly average, no more than $100,000 per employee for the year. And then you're going to divide that by 12 to get a monthly average and multiply it by 2.5.
Mm-hmm.
So the 100K is on the front end, let's say, of the calculation. Then you'll have an amount that you need to spend over 8 weeks following the loan origination. And again, at least 75% of which needs to go to payroll for forgiveness.
Can you talk a little bit about, it seems like there's a little double dipping if you apply for a PPP loan and then you also apply for unemployment, but maybe that's because the goal of PPP is to keep small businesses going, right? Wait, can you talk to that a little bit?
Yeah. So the key to understand about unemployment is that you certify every 2 weeks. To receive that benefit, you'll go online and certify how much you made over the last 2 weeks. If you made 0 or less, you'll get some unemployment benefit. If you get the PPP loan halfway, 4 weeks in, and you use it to pay yourself, then when you certify your unemployment benefit for that 2 weeks, you're going to be required to note that. And then your unemployment benefit will drop. What you can't do is pay yourself from the Paycheck Protection loan and then tell unemployment that you didn't make any money. That's fraud. So you should apply for both. In most situations, in general, I'll say that. But then it's a matter of which you use to replace your income in any given period of time. If you're on your own, I had a client yesterday, sole proprietor, sole employee. They're going to file for unemployment until they get their loan. For that 8-week period, they'll pay themselves from the loan, and they will not certify that they need the unemployment benefit. When that loan 8 weeks runs out, if they're still in a position where they need unemployment benefit, they'll continue to get that. The PUA runs through actually the end of the year. The additional $600 a week is April, May, and June. April, May, June, and July. After that, it drops back down again, but you'll want to see the website for that.
And then just to clarify, the EIDL loan is funded through SBA. So that application is on the SBA site, but the Payroll Protection program is funded through banks.
Correct.
So if you applied for an EIDL online, don't worry, you did it correctly, but you will need to go through some sort of regulated financial institution or bank. And it can be anyone. You don't necessarily have to have an account with them, but you do have to go through a bank for the PPP program.
I should add something to that that's important. If you applied for EIDL prior to March 31st, and you will have to reapply again. Your approval number must begin with a 3. If it does not begin with a 3, you should reapply for EIDL again. They changed the system because of frequent problems with the system. They brought in a new processor for the EIDL loans on March 31st. And so we've had to tell everyone who applied prior to March 31st to reapply.
Great point. So here's a question from Jessica. I'm a small business owner, had an employee already apply for unemployment. Can I still apply for PPP? And the answer is yes, you may. And the scenario I just walked through earlier about where you're about certifying unemployment would now fall to your employee. If you paid them from Paycheck Protection funds, they would have to include that in their unemployment certification for that period. That won't keep you from applying for PPP. It also won't keep you from applying for the new PUA program.
Alrighty, I'm just typing into the chat that the Zenefits site with the list of 100 lenders was last updated April 15th.
Sure.
Yeah, Larry, check me on this, but we're thinking, what, 5 to 8 weeks to hear back on EIDL in some cases?
It can take that long. Some people have received funding from EIDL in shorter period of time. It depends on who the reviewer is. They've had to bring on lots of new people who may not be as experienced, and they can only make certain types of determinations. I've had some clients who have not, who've directly gotten their major EIDL loan right away. They did not get the cash advance. They received an award of $300,000 loan right away. And that was a determination that was the need and that's what they should get. Other clients have only gotten $1,000, and that's because they had no employees, no W-2 employees, and just the applicant, and it was awarded EIDL. The cash advance was awarded solely on the basis of the applicant being the employee. That did not mean that they were not qualified potentially for the other loan, the up to $2 million loan under EIDL. They were being considered for that. So the process is an ongoing process. Ideally, they will look first at your approval process for the cash advance, the up to $10,000. You'll be awarded up to that amount if you qualify, and then you'd be considered for the up to $2 million of a loan amount. And that's typically going to be based on your working capital need for 6 months. And they arrive at that by looking at your gross profit, and they will typically take approximately 50% of the gross profit as your working capital need for a 6-month period.
Larry, one of the questions is forgiveness guaranteed if a self-employed person uses the PPP funds to pay themselves? So they're the only one on payroll. The PPP guarantee requirements are this: to be qualified to be considered for a guarantee, 75% of the loanable amount must be used for payroll or payroll related expenses. So if you pay yourself, you're the employee, and and you pay yourself, 75% of that is fine to be counted as what you paid yourself. And then the other 25% can be used for other approved expenses like rent, for example, utilities, that sort of thing. That's the other 25%. So if you effectively utilize 100% of the loanable amount for under the terms of the EIDL loan, and that at the point of measurement, which is a period of 2 months subsequent to funding, you meet that criteria, which I've just mentioned, and also the criteria that your equivalent headcount, your employee equivalent headcount, is comparable or greater than it was pre-COVID, then you're fine. So, but if you're the only employee and you're still around, then your headcount is the same. And if you spent the money on yourself, at least 75%, and the 25% went to other acceptable expenses, then technically you would get 100% forgiveness. Thank you. All right, and then I'm reposting the link to the Pandemic Unemployment Assistance, which opens on Tuesday, April 28th.
There are several questions about, I think you just answered them, Larry, but for everyone worried about being the sole proprietor with no employees, even if you take a draw or a distribution, you are eligible and can pay yourself from those funds. Again, all of the real detail is between you and the lender, so it's important that you read those documents. But yes, you are qualified, you are eligible, even without employees.
There's a question concerning grant status. First off, the potential for a grant is associated with the $10,000 cash advance. That is a feature of a loan application for up to $2 million. That feature was put in to address the need for immediate cash by some of the small business owners, that there was a need to get cash out quickly to some folks because they had a desperate need. Now, that was supposed to happen within 3 days, but we all know that they didn't meet that standard. And they're far, far, far away from it. But if you have, I have a client who has 10 employees, and they received a $10,000 cash advance. And they got the $10,000 cash advance because they met the requirement of having 10 employees, and they were assigned $1,000 per employee. That is going to be a grant for them. They are using that for those employees, and they met the requirement. The rest of the $2 million, up to $2 million, is a loan, and it's a loan of 3.75% interest rate with a maturity of 30 years, and the first year is going to be payment is going to be delayed. The PPP program is a loan also, but it has the opportunity, the potential of being forgiven in full or in part, depending upon your ability to meet the terms and requirements of PPP, as Don has mentioned.
A quick comment on reapplication for EIDL one more time. Your confirmation number, not approval, your confirmation number should start with a 3. If it does, then you do not need to reapply. And by the way, I put up a slide. It's disaster customer service at SBA.gov. Disaster. Laura, if you could put that in there.
Okay.
You can email them with your confirmation number to get an update. Not sure how soon.
Disaster customer service at
SBA.gov.
Okay, thank you.
And I am going to also provide the phone number for the SBA customer service. Now, there are long wait times, but they do answer the phone from 5 a.m. to 5 p.m. Pacific time.
Another quick comment, your revenue or your business does not need to be closed to qualify for a loan or for unemployment. So the key is to be impacted, right? If it's 50% sales, whatever it may be. So there are a couple of questions about, I dropped 50%. Am I still eligible? Yes, you are.
This is being recorded, and we're not able to add your email. Due to California privacy laws and federal privacy laws, you have to give us your email at the link that I shared, which is Pasadena. Oh, shoot. At the Pasadena SBDC. So the link is in chat, and I'll share it again. EIDL is the disaster loan that includes the feature that Larry was talking about with the $10,000 advance.
What else, folks? We have another 10 or 15 minutes or so. If the goal here was to answer as many as we can, so please keep them coming. I'm going to go back and see if maybe we missed some.
All right.
So someone indicated that they received a message from a lender that they applied to for PPP that indicated that based on the volume they had, they would offer them the opportunity to apply to another lender if they so desire. I would take advantage of that, and I would go to one of the links you have and find a smaller lender and contact that lender to apply. I would also let the lender know who sent you that notice that you have chosen to withdraw your application with them and you are going to another lender, just to make sure there's no confusion on that point.
Yeah. And then I'll share the link to the EIDL loan in chat.
Yes, we are suggesting that smaller lenders are better for smaller companies. Why is that? I think that there is more of a sensitivity and an appreciation for working with small borrowers. They are less, I think, mechanical in their responses, that you tend to have a more personal approach. They are used to dealing with people who may not have financial statements provided by a Big Four accounting firm. And they're used to people who may not be a corporate entity, but may be a sole proprietor who keeps his records on a spreadsheet. And the large banks are not as sensitive to that. And they are more geared to whether or not they have a long established relationship with you. So it's not so much a criticism of them, but it's, I think some people are geared to handle certain types of customers.
Right.
Here's a question from Charles about the 8 weeks, and it's a good one. The PPP loan deadline is June 30th. And yet you have 8 weeks to spend the money from your loan origination. What if that goes beyond June 30th? Everything that I've read does not say that it ends at June 30th. Your expenditures end there. All it says is that you need to spend it for those immediate 8 weeks. You can't apply for PPP after June 30th, but you should still have a full 8 weeks to spend the proceeds. We have asked for clarification on that because some folks see it as if you must spend by June 30th. But as we get closer to that, and that window closes, they're not going to require you to spend it in a week or 2 weeks or a month. They're going to want you to have 8 weeks.
Okay, someone indicated that they applied for PPP with Wells Fargo because you have a business banking relationship with them. I would suggest that you start the process with them, complete it with them unless they tell you otherwise.
And then, Larry, do you have any advice if you wanted to withdraw your application, but there's really no one specifically to talk to? Like,
I know that at Bank of America, that's the issue, that they've set it up so that it's an online process. I would certainly, if you have a branch bank that you deal with and you have a banker there, I would compose an email to that banker and have them pass that word on to the loan department. That would be, or find out from your branch that's open, and there are a number of them around town that are open. Who could you let them know you want to withdraw your application so you can apply elsewhere, and how do you get that information in since they're not accepting calls?
Right. Right. And then, Larry, can you share that link again with the SBA lenders? I'm scrolling through chat, but it's kind of having trouble finding it.
Okay.
For smaller lenders, we'll share that link one more time.
Okay, I will share that with everyone. It's https://smartasset.com/insights/PPP-loan-lenders. So that's in the chat to everyone.
Emily asks a good question about bringing back employees. And I think it's important for everyone to, assess your situation and how you would spend the money. If it's if you don't need the employees, for example, if you're closed, does that make sense? If they could potentially make more money on unemployment. So the answer, Emily, is, you'll have to assess your situation. You can apply for a Paycheck Protection loan and then not choose to take it. So you'll have some options there. The specifics on FTEs, they really get into the weeds, but in simple parlance, if you do bring back fewer FTEs, fewer 40-hour week blocks of employees, then your forgiveness will go down. Now,
Don, one correction. It is a 30-hour week.
Beg your pardon. Right. Having said that, at the end of the day, it's a 1% loan. So if 100% forgiveness is the only way you want to take the loan, then you'll want to plan that out, work with your lender to make sure you understand very clearly what you need to do. But at the end of the day, folks, it's a loan. In that case, it's 1% for 2 years. So it's pretty cheap money, as they say. But I don't know if that helps, Emily, but a little insight to think about. Okay. I think we're starting to slow down.
Yeah.
Folks, really appreciate your joining us today. I hope you found it helpful. We will be have been doing these just about every week. Again, check us out at the SBDC for more information. And best of luck to all of you. We're here to help. Please reach out.
No cost, no catch.